My name is Rory King, and I'm a second-year finance student at Georgia Tech from Decatur, Georgia. My two stocks are JB Hunt and Qualcomm. Outside of this research, I'm involved as the treasurer of Finance Society, and I am a member of GT Boxing, and I've passed CFA L1 exam. I enjoy watching TV, playing pickleball, and the Atlanta Falcons. Let's talk about JB Hunt. JB Hunt is a transportation and logistics company based in Lowell, Arkansas, and founded in 1961. It is now the fourth largest trucking company in the U.S., and their vision is to create the most efficient transportation network in North America. JB Hunt has 5 distinct and complementary businesses, including intermodal, dedicated contract services, integrated capacity solutions, final mile services, and truckload. Intermodal is the largest division with a 100% 53-foot high cube-contained fleet. Dedicated contract services offers value-driven supply chain solutions, integrated capacity solutions, matches customer loads with third-party carriers, final mile services handles delivery for big and bulky items from the last point in the supply chain to the customer or point of receipt, and truckload, the last and smallest segment, is full-load dry van freight. Apologies for the lack of a 3Q slideshow, but they haven't put one on the investor relations page yet and have not released one. The earnings report for Q3 2025 was very positive considering the current freight environment, with revenue staying flat compared to Q3 2024 and a significant operating margin and EPS increase year over year. Revenue for Q3 2025 was $3.05 billion. Operating income rose 8% to $242.7 million, and EPS rose 18% to $1.76 per share. Revenue stagnation was due to decreased volume in ICS, DCS, and FMS, and a decrease in gross revenue per load in JBT and JBI, which is offset by a 3% improvement in DCS productivity and a 9% increase in revenue per load in ICS, as well as a 14% increase in load volume for JBT. From the conference call, we learned that the increase in operating efficiency was due to structural cost adjustments. JB Hunt initiated a cost-to-serve initiative that set out to remove $100 million of structural costs. $20 million of this is estimated to have been implemented already, and the remaining portion is expected to be enacted and benefited from in fiscal year 2026 and beyond. In addition, management noted that the freight environment is possibly going to be affected by what management referred to as the elephant in the room, which is the acquisition of Norfolk Southern by Union Pacific, a deal which is currently pending regulatory approval. If it goes through, it's likely to create competition in the transportation industry, but management is confident that their branding and customer retention will prevent JB Hunt from being affected too catastrophically. However, this does bear careful watching as the situation progresses. Overall, management indicates that the transportation industry is not in a fantastic place right now, and when it recovers, JB Hunt will be likely to improve their margins and benefit from their capital expenditures even further. Now, let's look at the model. I expect CapEx as a percentage of revenue to stay at roughly 5% in 2025 and beyond because as revenue increases with demand when the freight industry recovers, JB Hunt will need to increase CapEx to match the demand, and depreciation will also follow this trend. Thus, I expect FCF to increase as net income increases with revenue growth and lower costs as the freight recession subsides. Cash as of Q3 2025 is at $52 million, which is roughly in line with the $46 million I had predicted. Long-term debt decreased, moving from $977 million in 2024 to $902 million in 2025, but short-term debt increased significantly, going from $500 million to $700 million in 2024 to Q3 2025 to date. I'm expecting flat revenue in 2025, which is in line with performance in quarters 1 to 3, as well as management expectations for the fourth. Because of this positive trend in margins from Q3, I'm predicting an overall operating margin of 7% for fiscal year 2025. As the benefits of the cost reduction initiatives are realized over 2026 and beyond, I expect margins to increase further to 8% and then even further to 9%, regardless of the macro environment. I expect revenue to increase as the transportation industry recovers, and I have a target PE of 18 for JB Hunt given the current macro environment. Overall, the intrinsic value I have listed is $184.53 and a share price of $168.98, which is roughly a 9% upside. Because of this, combined with the strong message received from the $780 million of share repurchases so far in 2025 to date, I would recommend a buy for JB Hunt. Thank you for listening.